All right, guys. So we've officially crossed six figures in Bitcoin. And so I want to walk through this with you guys because I think this is really important because it's really easy to get caught up in the hype. And I think a lot of people are right now. And that's why I'm bringing this up. Is so obviously, as you guys know, post-election cycle, we have gone absolutely nuclear on the stock market and Bitcoin. So Bitcoin I think it crossed like 83,000. So Bitcoin price right now currently is almost 80. It's almost about to be 84,000. I think it was 84,000 a second ago. Yeah, so it went over 84,000. Everyone's losing their mind. Over the last 5 days, we're up like 11%, which is insane to think about in a 5-day period. It's gone crazy. And so it's easy to be like, oh my God, I'm missing out. Oh my God, I need to get in there. Oh my God, FOMO, fear of missing out, that is. And if you do that with anything, you're going to lose. And so I sit here and I see our portfolio soar over six figures. It's cool. But if I get emotionally reacted to a positive or a negative, I'm going to lose. So I stay level-headed. And so what I say here is with the recent spike, we have surpassed, I can't speak, sorry guys. We have surpassed 100,000 in Bitcoin. This is a very small piece of our overall portfolio. You guys know it's about 2.5%. I'd have to recalculate. I don't know where it is now that it ran so much. But I continue to look at it as a speculative asset. No matter the hype, we continue to DCA. You guys see my DCA buys every single day in school. Never too high, never too low. Consistency wins. And so if you really think back over the last 11 years we've been investing in total for stock market, everything, the market's done some crazy things. Like if you look at year to year, there's tons of volatility. Just in the recent years, obviously, 2022 was a negative 20% year. 2020 we had COVID. That was a 34% downward trend. And if every single time something negative or in the reverse end, a good year, I get so emotionally connected to my investments or so emotionally connected to my money, I will make the wrong decisions, which is why I create a systematic approach to this entire thing, which is why we automate everything. We are not good as human beings with money, naturally. And so I know that and I'm aware of that. And that's why we do everything we do here in the academy, is because we need to be emotionally disconnected from our money, and we need a system to tell us what to do. And that system should be based on facts and data and consistency. And that's what we do. And so you guys know every single week we do $120 a week into our Bitcoin account or into our River account. And I transfer that over to Ledger. And that's really all. And so recently I also had a tweet about, where is it at? Right here. So Bitcoin crossed 80,000. There will be tons of FOMO, fear of missing out. This is where investors lose. And I put quotations because if you're a real investor, you know not to do that. And then I said, I don't know how many times we're going to see this cycle play out before people learn. Because what's going to happen, guys, naturally, is eventually you're going to have a little bit of a drop-off. You're not going to sustain an increase like this. Like that's just not reasonable or practical to think about. Sure, could it run a lot more? And could it be a year before we see a decline? 100%. But what if we see a decline tomorrow or in 3 weeks? What happens, and this is statistically proven from COVID, a bunch of people rushed into the market when COVID stimulus checks came, and everyone thought it was so easy to make money, and they didn't realize the fundamentals of wealth building. And I think it was something along the lines of 80% of accounts that were open during that COVID boom cycle have been closed. That tells me there's a lack of education and there's a FOMO component to this. And what I want to avoid at all costs is exactly that. So with that being said, guys, do not rush into Bitcoin. If you don't have Bitcoin, there's no reason to own Bitcoin all of a sudden. If you have a thesis for it and you have a reason that it should be in your portfolio, that's a whole different thing. But here's what I'm going to warn you about is don't make an emotional decision and back it by logic. That happens all the time. What's going to happen is a lot of people are going to say, well, I think it's actually time to own Bitcoin now. And they're going to emotionally buy, and then they're going to gather their facts of the matter after they do that and then justify away. And so whether or not you own it, that's the price of this right now should not determine whether or not you get into it. So be very careful about that. The reason I bring this up, guys, is there's statistics and data that backs this. If I just typed in timing the market, I'm sure I could type in a ton of different things in the academy. I want to share a few stats. This is stock market related, but very relevant to crypto as well. If I had an S&P 500 index fund with a $20,000 investment in 1979, and I let that sit until June 30th. That, assuming I stayed the course, would be about 12% return, close to it, $2.1 million. If I missed the 5 best days during that whole entire 40-year cycle, 43 specifically, my return would be dwarfed in comparison to 2.2 to 1.3. Just 5 of the days over a 43-year-old cycle. Could you imagine? It'd be very easy to miss the 5 best days if I emotionally reacted during this time. Even if I didn't, if I tried to time the market in any sort of way. 8 of the 10 worst performing days happen within 1 week of the 10 best performing days. Not to mention, over the last 20 years, this isn't on the screen, all of the best days happen during the worst times. So if I look at the 10 best days over the last 20 years, they happened in 2008, 2009, and 2020. You're not going to guess. You're not going to emotionally, and if you make an emotional decision, you're going to fail as well. But you're not going to guess, and that's okay. Just live with it, okay? So the reality is stay invested, stay consistent, do everything we talk about, DCA, all the basics here, because that's what's going to make you win long term. It's boring. It's not fun. It's not supposed to be fun. If it was fun and you were sitting there like playing with your investments all day, people would lose everything they have because they're making emotional decisions based on an excitement feeling in their body. That's not the way to invest. And if you look at this stat, in the last 40 days or 40 years, the best 10 days out of more than 10,000 accounted for almost 2/3 of the stock market return for the entire period. Good luck getting that right. Just stay invested and you'll be fine. This is how you make real money. This is how we've done it. We haven't done anything crazy. I have some really good data here, and if you want to watch that video. And then also down here, if you ever look at these quilt charts, these are all the sectors like kind of broken out. And as you can see, asset allocation, where this like little white, this line is a balanced approach of all of these different sectors. And so you're not going to guess which sector is going to be the best of the year. You're just not. Like, one year it was large cap, one year it was small cap, emerging markets. You have REITs, you have back to small cap. You're just not going to guess. Commodities in 2022, cash in 2018. Who would have guessed cash at 1.8% would be the best performing asset? You're just not going to guess that. So there's no reason to try to guess it. And so people also worry about this, and they're like, oh, it's an all-time high, I shouldn't be investing. Well, data says you should, and I listen to data. And so the short of it, guys, is continue to DCA, continue to do exactly what we always talk about. There's nothing new here, but it's a reminder, because people don't need to be taught, they need to be reminded. And especially post-election, I know emotions up here, both sides, and I also know people are emotionally connected to their money naturally. And so it's a very dangerous time right this second to let that play out real time. I've already seen articles on different news channels that it's either we're doom spending because we think the worst of the worst is going to happen, or the reverse. We're so happy what happened, so we're going to emotionally spend. Regardless, you're emotionally reacting one way or the other, and neither one's going to work out well for people. So reminder, hopefully everybody stays level-headed, grounded during this time. I appreciate you guys. Let me know if you have questions.